Max here from Daily Market Movements. Today it is Wednesday, which marks the midway point for this trading week. Now on Monday, if you haven't yet seen my video, I would advise you to go and have a look at it. On Monday, I basically analysed the markets for the gold, Nasdaq100, S&P 500, crude oil and euro US dollar, as I always do, with my expectations going into this week. And of course, during today's video, we're just going to go and have a look to see what's happened so far and where I believe the markets will be heading as we go into Thursday and Friday. So in front of me we have the gold markets. Now gold, very, very interesting. We rose on Monday and going into the end of last week, and I said this is a fantastic selling opportunity. So if you go and look at my video on Monday I made it clear that I did anticipate for gold to break down from those highs that we were trading at this week up at 1770, and as you can see we're now trading at 1757, and earlier on this morning we did go as low as 1745. So this is good here. I've drawn this white line here. We are in like a short-term downtrend here in the gold markets, but more importantly, we have stayed below this 23% level on the Fibonacci chart, which is this red zone here. So all that move was going into the end of last week is that we went and tested the top of this 23% Fib level, and we've been rejected. So that tells me only one thing, that we are heading towards my take profit price, which is down at 1700, going in towards 1680. What I have found, guys, which is very interesting, is a comparison to the Bitcoin market. Now, I know gold and Bitcoin, they're not very well correlated, but of course they are both seen as safe havens. And, as I've been explaining over the past couple of weeks now for the gold market, we currently find ourselves trading in this A, B, C correction pattern. So if I just show you here, we had the A movement, then we had the B movement, and towards the C. Typically speaking, when you have an A, B, C correction, the A movement is the same size as the C movement, and that's exactly what's happened here. So if I just go and pull the movement that we had on that first leg for the A markets, and then I dragged it down from the B, pretty much in line to where we bottomed here on that C leg. So that makes it very certain to me that we are currently in an ABC correction, and for gold to now turn bullish, we would have to break above this 1830 level where we have struggled to break above. We've peaked above we've peaked at that 1830 level, which kind of makes sense as well because it is the 38% level on the Fib chart. But the fact that we've been rejected there, that is very bearish to me, and hence that's why we got rejected. So to me, it's very likely that we are going to go down towards 1680, because if I just quickly show you the Bitcoin chart. So this is Bitcoin. Bitcoin's currently in an ABC correction, just like the gold markets, but unlike gold, we've managed to break above that B section. So if you think about it with the gold markets, this would be the 1830 area, but Bitcoin over the past couple of days has broken above the 1830 level, and look where it's heading. It's heading towards the top of that A section, and I think it's very likely that we are going to break above it and go trading up towards that 57,000 area for the Bitcoin markets. But unlike Bitcoin, gold has really struggled to break above that B leg, and hence that's why we are trading now down towards the bottom of this Fib chart. So I'm bearish going into the end of the week. I think personally we are going to go down towards 1700 to 1680 in the upcoming days. Now over to the Nasdaq100. Nasdaq100, very interesting. Futures right now are pointing towards a downside. We're down roughly 2% for the Nasdaq100. The Nasdaq100 has really struggled over the past couple of trading days. In fact, right now from the tops we are down 7.68%. So it looks to me that we could go and touch the minus 10%, which would be a perfect correction here for the Nasdaq100. I think eventually, we will bounce, but the big question is this, guys: do we bounce here on this uptrend that we've been trading in now since roughly the past 12 months, or are we going to go down towards a 200-day EMA, which would represent a 10% correction here in Nasdaq100, which is down near that 14,000 area, and bounce? I do believe that we're going to bounce. I do believe that there are some fantastic buying opportunities at this moment in time in the Nasdaq 100. And you know, there's a fantastic money making opportunity for you, or whether you're a short-term trader or a medium to longer term trader. But it's just trying to you know, guess when that bounce is going to come in. So my advice to you right now would be to open a trade here, but not a massive trade. So if I just open a long position here, and you want to kind of put your stop loss just below the 200-day EMA, because if we were to break down lower, then we would you know, probably go and touch that 200-day EMA, which of course is down near 14,000. So this is a fantastic risk reward ratio you have here. You know, the red represents where the stop loss is, and the green. So towards the upside, you know, you've got a potential of 8.36%, but towards the downside, you're risking 5.29%. So I think this is a fantastic opportunity to buy the Nasdaq 100 on this trend line. And if we did break down further, well, then you can add a second trade, which would look more like this, where you would have a upside potential of 12% back towards the all-time highs here for the Nasdaq. For the Nasdaq 100, where I do believe we will be trading going into Christmas time. But you know, you'd be risking roughly 2.25% towards the downside, which would be that stop loss just below the 200-day EMA, and on the upside you have a potential of 12%. So that is a fantastic risk reward ratio. I really do like buying the Nasdaq 100 at this moment in time, and if we did break down lower, then fantastic. That's just more value that I'm going to take advantage of. One other thing I want to point out to you guys is look at the RSI. We are now considered to be oversold here in the Nasdaq 100, so I do believe a bounce is coming. Same here. If we move over towards the S&P 500, we've broken below the 50-day EMA. Now the S&P 500 looks a little bit more worrying to me. I think that we could go and target the 200-day EMA. It hasn't you know, fallen as deep as the Nasdaq 100. So if we were to fall towards a 200-day EMA, that would represent another 3.71% downside here for the S&P 500. But currently speaking, if we see how far we've fallen from the top, we are roughly down 5.59%. But of course, if we were to buy here, that means that we have a potential of 5.93% towards the upside. So again, there's some fantastic value on offer here for the indices here. And I personally believe that going into Christmas, over the next 3 months, we will trade towards the all-time highs up at 4,500. So very bullish here for the S&P 500. Again, we are approaching that oversold territory. We're not quite as low as we are in Nasdaq. We're at 38, but you know, that still gives us plenty of plenty of room to move towards the upside. Moving over to the crude oil markets. Now, I just want to start by saying a huge congratulations to all of our Signal clients. I did say going into this week, or that's on Monday, that I did anticipate for the crude oil markets to go and touch $77 a barrel and complete this Fibonacci retracement graph. So, and that's exactly what's happened. On Monday we opened and we shot as high as $78 a barrel. Now, I do anticipate crude oil markets here to pull back. You know, we've broken above that 1% level on the fib chart, and it looks like we've run into some trouble at $80 a barrel. So I do anticipate a pullback as well. Look at the RSI, we are at 70, so that does indicate that we are slightly overbought in the short run. It's not to say that crude oil isn't going to go higher. I do believe it will, but I think that, you know, you're looking at more like a move like this, and then we go and retest that $80 level. So I am bullish for crude oil, but it doesn't really interest me at these high levels. I don't particularly want to short this market because it is very bullish. So I'm going to be on the sidelines now for the crude oil markets. And then moving over to the euro US dollar, huge development here in the euro US dollar. We have broken below that that supportive level. So I've drawn a Fibonacci chart from the lows that we achieved back in March 2020, and of course all the way towards the highs that we achieved back in January 2021. And you know, there was a key level of support at that 38% level on the fib chart, and we've broken below that key support at 1.17, and that to me looks that it looks to me that we're now going to go and target that 1.15 area, which represents that 50% level here on the fib chart. So I am bearish here. I still believe we've got a little lower to go here in the euro US dollar. We've broken below these key supportive levels at 38% level on the fib chart, and then also we did bounce here on two previous occasions back in September 2020 and November 2020, and you know, we've broken below there. But one thing I would point out for the euro US dollar at this moment in time is that the RSI is telling us that we are oversold. So whether that gives us a bounce back up towards a 38% level, that's still to be told. But personally, I think we do go lower. I've currently got a signal trade open where we sold at 1.16. We're currently making a significant amount of profit in the signal team, so well done to everyone who copied my trade there. And that is going to be it for today's video, guys. I'm going to wrap it up, make it short and sweet. Just want to let you all know that if you are wanting to receive trading signals from myself and the rest of the team here at Daily Market Movements, then you can go and head over to our website, dailymarketmovements.com. I've left the website link in the description of this video. We charge a very small fee of £249 for a year's membership. So thank you very much for tuning into this video. Please give us a subscribe and a like, and I hope to see you all on Friday when I post the next video where I conclude this week's market movements. So thank you.